Yeah, Don Mazzella here for Small Business Digest on a very difficult day because I've got a very bad cold. But I couldn't resist having Alex Shvarts join us. I hope, Alex, I pronounced as close as I can get to it. Um, he's here to talk about subject that in our most recent study uh, came back to be number one facing American small business in our survey of this is how are they going to maintain their financial independence over the next year? Because the people are going to have to borrow money to expand, borrow money to make up for salary increases. But since Alex is the expert, I'm going to leave everything up to him. Welcome, Alex.
Thank you. Good morning.
Good morning to you. So tell us a little bit about your background first, because I find it fascinating, and then about your company and finally a website.
Sounds good. So again, it's Alex Shvarts, and many people mispronounce my last name, but that's okay. I'm used to it. I'm the CEO and founder of a company called Fundkite, and we are in the revenue-based finance industry. What does that mean? We provide financing to small and medium-sized businesses. We just turned 9 years old 3 days ago. And what does revenue-based finance mean? So we provide funding based on a business's future receivable. It's not a loan product, which is what banks used to do, because and a loan product is more around credit scoring. Credit scoring is not a key factor to us. What we look at is time in business, the industry you're in, and what kind of revenue do you historically generate, and what do we project you're going to generate in the future. And so we buy that future revenue at a discount. And we collect the revenue that we purchased based on your sales, right? So a portion of your sales will be remitted to us until we collect the balance that we purchased. And as your sales fluctuate, so will the repayments to us, right? So there is no fixed payments like with a loan. There is no term like with a loan, because with a loan, you have a fixed payment. You have to pay it back over a certain period of time. With us, there are no fixed payment and there is no term. We will collect based on your sales. So if sales, God forbid, are lower, then it will take us longer to collect. And if sales do increase, then it might take shorter, right? So that's the risk we take. We take the risk based on your historic performance that you're going to do well in your business. And our customers, so we've processed probably over 220,000 business applications. And we've provided funding to almost every industry you could imagine, from doctors to restaurants, to retailers, to marketing agencies, manufacturers, and so on. When banks say no, we say yes. And a lot of times banks say no because for banks, it's purely a credit-driven product, right? They look at your credit scores, and most of the time it's very, very hard for small businesses to obtain bank products, right? Our industry is pretty well known now, and I'd say the history goes back about 10, maybe 12 years. The growth has been exponential. A lot of major institutions are providing our product. The other difference is we move very fast, right? So we can provide funding to a business in as little as 4 or 6 hours. It really depends how quick the business can get us, or the business owner can get us the information we need to make the decision. But we move very, very fast. We've provided, $500,000 to businesses in, as little as 6 hours, which you're never going to get a bank to move that fast if they're going to move at all. So that's the key difference in what we do and how our industry operates.
But let me ask you this question. I think the pandemic showed that many businesses really don't have the cash reserve to survive more than a month or two into the future. I mean, well, they're in business 20 years or 2 years. Yeah, if another pandemic came, I don't think we'll have the same government giving us all that money as we did the last time. How do you protect yourself against um, a natural disaster event that
Well, I
prevent?
don't, I don't, I don't think you can protect yourself against a natural, uh, uh, I don't think that nobody has that type of a crystal ball to protect themselves against a natural disaster or a pandemic. What we did pretty well during the pandemic, and we worked well with the businesses that we provided funding to and gave them the relief they needed to get back on their feet. But look, you can have an earthquake tomorrow. You can have a power outage. You can have many things. And, we have to believe that America will come back on its feet and businesses will reopen. And it just might take a little bit of time, right? Now, look, if you have a hurricane that wipes out half a state, I'm in Miami now, and we're expecting a pretty bad season for hurricanes. And there's a possibility that, some businesses might not reopen. Some businesses might take a while to reopen. And so we do price that into our scoring models, and there's certain risks that we might need to avoid a certain area, and we'll tell businesses we'll ask a business, how are you preparing for, the possibility of major hurricanes? But there is no sure-proof guarantee against the risk of a business being shut down. The same way, we take a chance on a business, and if they fail, that's the risk we take, right? There's businesses fail. So it's just good underwriting, good scoring models. But there is always a possibility that a business can fail, or some catastrophic event out of any of our control can jeopardize a business.
But what do you look for? I come to you. I'm a small business. I've been in business 7 years, and I'm averaging $600,000 a year. But I'm looking for, let's say, a $200,000 um, loan to build out my second place. What are the questions you ask?
So again, I just want to emphasize, our products are not loan, they're purchases of future account receivables. Okay. What we're going to look at is your cash flow. That's the most important thing. How do you manage your business? How's your cash flow looking? How do you operate? Are you in the black? Are you in the red? Are you going to be able to take on additional funding until, let's say, that second location opens, and sustain and be able to pay a portion of your sales back to us and still stay in business, right? So we will definitely look at your cash flow. We need to see how you operate your business. Do you have access cash flow? Because you're talking about opening a second location, right? So how will the first location be able to support that type of additional funding expense while the second location takes time to open, while you build that out? So we're going to price a deal, and we're going to give you funding based on what we believe your available cash flow is. So just because you're looking for 200,000, it doesn't mean that you can afford 200,000 at this time, right? We never want to give a business capital that they can't afford, right?
Right.
So, and that's what we look for. It's how much, our offer is not going to be based always on what you're looking for, but what we feel you can afford.
Well, but let's just explore this a little further. Do you then look at the people themselves, or is it all financial?
Of course.
And what do you look for in the people you
So-
lend?
So we speak to every merchant. If we provide a preliminary offer and we get into underwriting, we do speak to every business owner. We want to learn a little bit about them, how they operate their business. We will look at their history in the business, what they're looking to do. We're going to look at some credit factors, but that's not going to be the deciding. The credit's not going to be a deciding factor for us, right? Certainly, if an individual is, 9 months behind on payments, and they haven't paid rent for their business in 9 months, and they're in bad shape. I mean, no matter, and the business is losing money, we're not going to be able to provide funding for them, right? They're in bad shape. I always tell entrepreneurs, right, that it's important to know when to call it quits, right? You have a plan, you want to grow your business, you're in business X number of years, and maybe right from the get-go, you just can't make it profitable, right? You have to know when to call it quits. There's nothing wrong with accepting failure, right? And being able to move on and restart or do something different. Look, not every entrepreneur hits a home run on their first time, right? Not every one of us is an Elon Musk or a Zuckerberg, right? Or a Sergey Brin. A lot of us, we've had failures, and that's okay. But you have to know when to say, okay, this is not working. It doesn't mean that the next one might not. But you have to know when to call it quits. And sometimes we have that conversation with a merchant, and they might not like it, but that's the reality. Sometimes saying no is a hard thing to do, right? But sometimes people need to hear no, and they need to understand why no. And hopefully that gives them clarity, and that gives them the motivation to step aside and do something else or restart, right?
What's your website and how people can reach you?
Sure. Our website is fundkite.com. That's FUNDKITE.com.
Okay. Well, let me ask you this question. I worked once in a pizza restaurant, in which there's always two cash drawers. One for the government that we reported, and one that the owner and we brought home with. But how do you kind of look at a company and say, wait a second, maybe the numbers are better than they're making out, or what do you look for?
Well, let's address that. So you look a little younger than me, but I do remember a time when cash was the main way we paid for things, right? Cash today in businesses and pizzerias is really, in most storefronts, is really minimal, right? People use credit cards, debit cards. So I don't think that the cash side of these businesses is really that significant anymore. We do ask merchants if they accept cash and how much, if it's a pizzeria, for example, and then we'll look at the bank statements to see if they make cash deposits. So, if you look at a pizzeria and you look at their bank statements and they have absolutely no cash deposits, it's a little bit off, right? So, but most consumers today tend to, use their phone to pay or credit cards. So, but we have a way we'll ask the merchant about that, and we have a way to analyze that. But it's not like it was 20 or 30 years ago. I walk into restaurants, I always pay attention. I walk into a pizzeria and get a slice of pizza. I always pay attention to how people pay, and just don't see that much cash in it.
Well, maybe not. Well, I'm older. That was when I was a lot younger. But let me ask you this question. You have some thoughts. You've done some surveys. What are your thoughts for the future looking ahead, what's going to be happening to small business?
So, we always say that small business is the lifeline of our economy, right? I think this is going to be a tough year still, right? Um, the election has a lot of uncertainty. Inflation is up. Just gasoline is starting to climb through the roof, right? Oil prices surged. So all of these aspects of the economy are certainly playing a role. Small business owners we talked to today, they're not thinking as much about expansion, even though some are, and about growing their business. It's more about methodical thoughts of how do we survive, right? We're more in a survival mode now than in a major expansion mode. So look, I'm an optimist, right? I'm an optimist, and I believe that, economy does have cycles and better times are ahead. And I look forward to that. But I think for the next 8 to 12 months, I think it's going to be some tough times. I think that growth is not going to be that significant. I think some businesses will fail because they can't keep up with the cost of goods going higher. So look, if oil and gas and oil prices just surged, right? A lot of businesses don't price, small businesses don't price, they don't have, reprice their products quick enough. Yet the suppliers are increasing products, the distributors are increasing prices. But the small business owner, he doesn't see it. He gets an invoice 30 days later. He doesn't know that the cost of eggs went up like another 75% because the truck driver that's delivering the eggs, his fuel went up, right? And so the grocery guy is still charging his customers the same price for the eggs, but he's making less, right? So a lot of small businesses are behind in catching up, right? So that's a little bit of, because look, what's a small business owner? He's wearing 20 hats, right? He's doing everything. So that's an issue. So next 8 to 12 months, it's going to be tough. I think we'll see a lot of, look, you've got inflation, you've got elections, you've got uncertainty, you've got probably all up and down the East Coast, you're going to have some major storms this year that are going to, maybe, I hope we don't, they're going to affect a lot of the supply chain economy. You have, so I'm not going to say it looks doom and gloom, but it's certainly concerning for the next 8 to 12 months. And then, by the way, we just did a survey recently, and, most business owners are concerned. There's a lot of concern because of the uncertainty, and certainly where inflation and other factors are playing a key role right now.
But you keep hitting back at a point. A small business owner is by nature optimistic. Do you think that optimism will overcome many of these problems?
I think optimism alone will not. I think, an entrepreneur and a business owner is a certain type of a breed of a person, right? They're a fighter. They are hardworking. They don't give up. And that, by the way, when I speak to entrepreneurs and business owners every day, it's just amazing to hear the passion in people, right? So they'll fight through it. They're going to take some bruises along the way. Hopefully, if they manage their business well enough, not perfect, nobody's perfect, right? They'll survive and they'll have better times ahead. You just have to be prepared for some rough times. That's all.
What will you do? Will you slow the amount of loans you do? What will you do when you see these things happen?
So again, we don't do loans. We provide revenue-based finance where we purchase future account receivables. We're not going to slow. In fact, our industry is growing rapidly because we fill the void that the banks have left for these small businesses. We might we might restrict or lower the amount of funding we will provide to certain industries based on the industries and sectors. But you got to provide money to people when they need it, right? And so that's what we're here for.
No, I agree. But well, if you see the economy going really downhill for whatever reason over the next year, would you call your loans or will
So
you?
we don't have an ability to call our financings. They're not loans. And so we can't call. We just, if it takes a business longer to remit the receivables we purchase, that's the risk we take.
We just have a few minutes left. First, your website again for people.
Sure. Fundkite, FUNDKITE.com.
Okay. Well, what would you, Alex? What would you like to leave our audience with? Our audience is made up primarily of managers under 50 employees. What would you say to them based on your surveys and what you're seeing today?
Yeah, I would say most important, take a breather, take a step back, look at your business, look at your supply chain, look at your customers, analyze where you are today, start to leave a little bit room in your cash management to see, what happens if there's a slowdown, what happens if cost of goods goes up. You got to take some time and analyze, and that's probably the last thing that business owners have is time. You got to find the time to do this. It's critical. Be prepared, be proactive, right? Instead of being reactive. A lot of business owners are reactive. They react when shit hits the fan. So, look ahead and say, what if? What if this? What am I going to do? How am I going to be prepared? That's the best advice I can give any business owner right now is take a step back, grab a cup of coffee, and analyze where you are and what happens if my sales drop, my cost of goods go up, there's some other events where there's a slowdown. Look at those things, take a breather, and just have clarity. Have a plan. Have a plan. And that will be very helpful to every business owner or manager.
On that note, we say thank you for very illuminating time. Thank you.
Thank you so much. Good luck, everyone.